It's February 16th, and this is the video log. It takes 30,000 to a million. And today, after I review the account for you and I show you some of my positions, I'm going to talk about briefly about uranium and see how it fits into the whole inflationary picture with commodities. All right, but first, let's go into the account. I'm going to be a little zoomed out because I'm going to be looking through some websites, so it's going to be tough to see on a magnified screen. Now, here are my positions on the right. If you're on a desktop, you could probably see this a little bit better, but you can just, I don't know if you'll be able to see it on the phone. Maybe you can zoom in. But these are the options positioned here. Feel free to pause your browser at any time to find out all the information that you might need about these positions. Here are the equities. Some commentary is that I'm really disappointed that PayPal continues to drop like a stone and wiping out my, my account performance here. I'm actually only 5,000 or so away from all-time highs. So just a nice day where PayPal decides to, perform normally, or at least not be the leader of the losers. It should happen. So anyways, these are all the rest of my positions. Amazingly, some of them were in the green. One of the outliers in the green is actually DD here, which I have one share of, just so I can figure out what will happen once the delisting happens from the US markets. Okay, this is the investor tab here if you are interested. I'm still carrying a ton of debt, 94,000. By the way, Robinhood just recently increased their margin rate. So from now on, they'll be charging 3% instead of 2.5. So I'm thinking maybe it's time to leverage a little bit. If everybody tries that at the same time, though, the markets will crash. So please, nobody else to leverage, okay? Just me. All right. Thanks. I don't even know what to sell, though. I feel like it's so undervalued. Anyway. Moving on. So this is the account tab. Lots of margin. These are my positions by total return. And these are my positions by equity. So you could take a look at those if you'd like. Now, that is it with the account. Moving on to uranium now. So what is it about uranium? It's a commodity, right? And commodities usually perform really well in inflationary periods. So uranium is kind of like a utility commodity, and it's very rare. And the thing that it really attracts people is the fact that it's been produced at a deficit. So the world actually consumes more uranium than is being mined. All right, so therefore, you would think that the uranium price would be rising sharply. However, actually, why don't we visualize that? One of the tabs that I pulled up is exactly this. So if you look at this graph here, maybe I'll try to zoom it in. Okay, if you look at this graph, you'll see that the black line here is actually the requirement for the world to operate, all of the nuclear stations to operate, and the other colorful lines are basically the productions broken up by country. So you'll see there that Kazakhstan, ever since 1990, has actually accelerated its uranium production as a share of overall production in the world, and it's been one of the major causes that's pinning the price of uranium down. So it's good for the Kazakhs, maybe, if they can operate this at a profit, but it's bad for all of the other producers in the entire world. So will uranium benefit? Well, it's yes, but just like any commodity, I think the uranium price is going to be in a downward trend for the rest of its existence relative to even fiat currencies, especially the strongest one in the world. As technology improves for extracting the metal from the ground, I think that the trend will continue. So what are we looking at here in this graph? Well, you can see that up until maybe 91 or 2, the production of uranium was enormous relative to the needs of the nuclear plant stations out there, nuclear power stations. So there's actually a ton, no pun intended, of uranium out there that's has not really been used. And you can see how over here, with the sharp price spike in 2007 or 6, that a lot of production began here in Kazakhstan trying to reap the rewards, but actually the rest of the world has been cutting down on production. You can see the squeeze, especially here in Canada, Cameco being the most major uranium producer of them all, has actually been shrinking its production quite substantially. And going from being, like maybe 20% of production, world production or more, to probably less than 10% at the moment. Someone that's been increasing somewhat slowly in production is the US versus the rest of the country. Even Kazakhstan has actually been cutting down production. So the production lately has been, in the last couple of years, the last 5 years, has been going down. So you would see this, you would think that given this air pocket here of this uranium deficit has been going on, we're still burning through supplies that we've had for a long time. But one thing that worries me, right, if I were to be a uranium investor, and I was, is that countries actually shutting down uranium, like nuclear power stations, power plants, because one, maybe they're perhaps aging, two, because they're politically unpalatable for whatever reason, even though they're clean energy, and also because they take, in order to build a new one, it takes a really, really big chunk of money. You need a lot of upfront capital that politicians aren't willing to allocate. It's not like the olden days, all right? So that's one of the reasons. And this trend here, since peaking in 2000, it's actually going down a little bit. Now, I don't know if that will reverse, given the fact that India and China are supposedly building lots of nuclear energy, as the West is declining in nuclear power. I don't know if they'll alone reverse the trend. I mean, they do have more people there than US and Europe combined, right? So I don't know. But, it's a guessing game. Do I think that there's going to be a spike in uranium? Yes, I do. But I would not be personally a long-term investor. So even though I was, right? But I was really waiting for that spike. I wanted the quick money, but the timing of this thing is so tough. And, recently uranium stocks doubled or tripled when there was a spike in the price. You can see it here. This is just Kazakhstan. So this is the price from the Cameco site, I think. Yeah. So this is from Cameco. And you can see that uranium spot price. So there's two prices when you're quoting in uranium. There's a spot price, and then there's the long-term uranium price. Long-term uranium price denominates basically the price at which a lot of the contracts are being signed to, because the way that the uranium market works is that utilities actually go into contract with producers or third parties for a certain amount of uranium over the span of whatever period they designate, and then they agree on a price so the mine doesn't go bankrupt, right, in case the price crashes. So that's kind of how it works. So that's the long-term price, and the spot price is basically leftover uranium of people that want to just go out and just search for the uranium out in the open market. The open market is not very well developed, so you kind of have to go to even to companies that store uranium, specialize in storing uranium, or you have to kind of bum it from companies that have leftover uranium in storage, and say, hey, can I get extra tons of uranium for my power station? So It's, it's not that developed like the commodities futures markets and stuff like that. Um, like the commodity exchange, like maybe other commodities, like iron or gold or silver or something like that. Okay, so there was a bump in 2011. I'm sorry, 2021, early in late 2021, I think. And so I don't know what to make out of this bump actually. The price has come down a tiny bit off of it. It's probably going to continue upwards because of the inflationary environment that everybody's in, and commodities tend to feel that the most. And I'm sure that production has dropped as a consequence of the last 2 years supply issues that the whole entire world is experiencing. But I don't know how much that is going to get washed off on the back end. So if I were to play uranium here, I would just say be very careful. I would probably do like like a I forgot the word for it right now, but I'd buy a call and then buy a put, right? Shit, what was it called? Like anyway, was it a strangle? Oops, that's not what we want to do. So anyways, straddle or strangle, forget. But you want to do one of those. Okay, you can do either one. One of them just you have a little bit of difference between the two entry prices that you want to do. Like for example, if you are doing one of them, what you could do is you could use the same strike price and just buy a call at that price, and then you just buy a put at that price as well. Or you could just leave some distance between them and bet that the price is not going to stay the same, because you would lose all of your cost basis if the price stays the same. But I don't think the price stays the same. I think it's going to be very volatile. So the chances of having a big upswing or a big downswing is pretty big. And so that should pay for the premium on both sides. So what I would, that's how I would play it. But again, this is not financial advice. Like you're responsible for your own cash. Make sure you do your own due diligence and research. But if you really wanted to play it, that's what I would do. Anyway, I'm not an investor in uranium anymore, but I might look into it. And if I would buy it myself, for me, I think Cameco is my favorite uranium company, just because I think they're very, 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 very intelligent, and they know how to operate the market really well. They're very experienced, and they've been around, they've been around the block for a while, so they know how the market goes. They know the ins and outs, and because of their size, they can actually influence the market a little bit. So I would put my money on them if I had to buy any company. I would buy them right now if they were back at the prices that I sold them at, unfortunately, but they never actually came back down to that 10, 12, $13 range. And so I don't own any uranium stocks. I don't own any Cameco. But if they were cheap, I would definitely buy them up. And that's all I have to say about the uranium market. If you have some input, or you think I got something wrong here in the analysis, then please give me a comment and educate me on the topic a little bit. But other than that, I hope you guys are making more money than I am. I'm trying to still get that all-time high. It's going to be very rough with these interest rates rising, and Robinhood pushing up my margin, right? So when you have $100,000 in margin, actually starts to you feel it in the account a little bit if they raise the rates. So anyway, hopefully that helps and you guys are making more money. All right, peace.